Hi students, I am here once again with yet another video. This is in continuation to my previous video which dealt with the topic government budget and the economy. In that video, as you all know, we discussed about government budget, its features and objectives. And that was the module number 1. So now we are going ahead with the same topic, and this is module number 2. So the topic is government budget and the economy, module number 2. So in this we discuss about the structure and components of budget. What should be the structure of a budget? What are the components of the budget? That's what we are going to discuss now. See, as far as components and structure of the budget has been classified into two. One is budgetary receipts, the other one is budget expenditure. I repeat, budget receipts and budget expenditure. There are two categories of a budget that we can call as structure and components of the budget: budget receipts and budget expenditure. In budget receipts, so before we start the various components, we should know what is budget receipts. Budget receipts refer to estimated money receipts from all sources during a financial year. That is budget receipt. Receipts, in other words, you can say income. What is the income of the government? What is the income of the country? And that is known as budget receipts. It refers to estimated money receipts from all sources during a financial year. There are various sources from which the money comes into the treasury of the government, and all those sources from where the money comes in, that is known as budget receipts. Now budget receipts has two types. One is revenue receipts, the other one is capital receipts. Revenue receipts and capital receipts. In this video, we are going to discuss, or we are going to focus on only budget receipts. That means the revenue of the government. We are discussing the revenue of the government, that is budget receipts. Okay, expenditure we will discuss in another video. Now, budget receipts has two types. One is revenue receipts, the other one is capital receipts. So, what are revenue receipts? Revenue receipts are those receipts which the government receives, which do not create any assets. Okay, when you receive the money, it does not lead to create any assets, nor lead to reduction of assets. So there are two aspects of revenue receipts. Revenue receipts are those receipts which do not create any assets. Okay, and at the same time, they do not lead to reduction of liability. That means your liabilities will not reduce and your assets also will not be added, or new assets will not be created. So that is what revenue receipts. I again repeat, revenue receipts are those receipts received by the government which do not create assets and which do not lead to reduction of liabilities. That is revenue receipts. Once again, I go back to the topic. Our topic of today is structure and components of budget. It has two parts: budget receipts and budget expenditure. What is budget receipt, or what are budget receipts? The budget receipts are estimated money receipts, estimated Again, estimated word I used. It's not real or actual. Estimated money receipts from all sources in a particular period of year or a financial year. That is budget receipt. So today we are discussing only on budget receipt. Now budget receipts has two types. One is revenue receipts, okay, and the other one is capital receipts. Revenue receipts and capital receipts. So first let us discuss revenue receipts. Revenue receipts are those receipts which do not, once again I repeat, which do not create any assets and which do not lead to reduction of liabilities. So revenue receipts again has two types: tax receipts, non-tax receipts. Okay, tax receipts, non-tax receipts. What is tax receipts? Now before we go into tax receipt, first we should know what is tax. Tax is a compulsory payment. It is a compulsory payment, is to be made by individuals, households, firms. Everyone has to pay tax. It is a compulsory mandatory payment we have to pay to the government. That comes under tax receipt. Tax is also divided into various types: progressive and regressive tax, direct and indirect tax, and nowadays GST, what we discussed. Okay, now what are direct taxes? Direct taxes are those taxes whose burden fall on the person who makes payment. Direct taxes are those taxes whose burden falls on the person who makes payment. Examples are income tax. We all pay income tax, and the burden falls on the particular person who makes payment. Wealth tax, corporation tax, they are all direct taxes. Indirect taxes. Indirect taxes are those taxes whose burden does not fall on the person who pays. Indirect taxes are those taxes whose burden does not fall on the person who pays it. For example, sales tax, excise duty, GST. So these are the basic examples of direct tax and indirect tax. Now, as far as in this video is concerned, we discussed structure and components of budget. Then it has two types: budget receipts and budget expenditure. What is budget receipt? Budget receipts are those estimated money receipts from all sources during a year, and budget receipt has two types: revenue receipt, capital receipt. So revenue receipts are those receipts which do not create assets, which do not lead to reduction of liabilities. Now revenue receipts has two types. One is tax receipts, the other one is non-tax receipts. Tax receipts are those receipts, rather before that we should know what is tax. Tax is a compulsory payment, must be paid by individual, households, then firms, all have to pay, and that is known as direct tax. Taxes are different types: regressive and progressive tax, direct and indirect tax, GST. So what are direct taxes? Direct taxes are those taxes whose burden falls on the person who makes payment, and indirect taxes are those taxes whose burden does not fall on the person who makes payment. The examples of direct taxes: income tax, wealth tax, corporation tax, and then examples of indirect taxes: sales tax, excise duty, GST. So, after tax receipts, let us now discuss about non-tax receipts. So what are non-tax receipts? Non-tax receipts are those receipts which are received from other than tax resources. I repeat, non-tax receipts are those receipts which are received from other than taxes. Okay, so tax receipts we discussed: direct tax, indirect tax, regression tax, progression tax. Okay, so what is direct tax, what is indirect tax, all we discussed. These are all we are discussing about revenue receipts of the government. We are discussing revenue receipts of the government, the income of the government. So tax receipts, then non-tax receipts. So non-tax receipts are those receipts which are received by the government from other than taxes. So what are they? They are, number one, fees, license, permit. So whatever fees we pay, whatever money we pay for getting license, permit, all those money will go to the category of non-tax receipt. Special assessment. Special assessment. For example, you have purchased a land in your nearby place, and that land you have purchased for 5 lakhs. But after a few years, the value of the land has gone to 10 lakhs. So that thing, what you are getting more than what you paid, and that comes under special assessment. Then comes escheat. So that money also goes to the category of non-tax receipt. Then escheat. Escheat means, suppose a person is there, he has a lot of property, but he don't have legal heir. Okay, so after his death, entire amount or entire money or whatever property he has, that will go to the government, because that particular property has no legal heir. So that is known as escheat. Then fines, penalties. Okay, we do, suppose say when you go out without helmet, when you drive very fast, you are caught by police and they take challan from you, they take fine from you, that type of fine, penalties. Sometimes you have to pay for something, for of some offense you have to pay some penalties. So all this type of money goes to the government as non-tax receipts. Then comes gifts and grants. So whatever gifts you get either from the people or from abroad, whatever gifts or donations you get, that all come under non-tax receipts. Then income from PSUs, public sector units. Whatever public sector units we have in our country, the entire income of all public sector units also come under the category of non-tax receipts. So fees, license, permit, special assessment, escheat, fines, penalties, gifts, grants, income from PSU. So these are all different sources where from government gets money, and this is categorized as non-tax receipts. Okay, so we discussed revenue receipts. Revenue receipts has two types: tax receipts, non-tax receipts. Tax receipts we discussed. Tax receipts, there are taxes, okay, direct tax, indirect tax, regression tax, accretion tax, all these we discussed. Then non-tax receipts. In non-tax receipts we have fees, fines, permits, special assessment, escheat, fines, penalties, gifts, grants, income from PSUs, that all come under government treasury. So this is all about the revenue of the government, that is you can say budgetary receipts of the government. So this is one part, budgetary receipt, revenue receipt. So actually budgetary receipt has two types: revenue receipt and capital receipt. So we discussed revenue receipt in this, tax receipts and non-tax receipts. Now comes capital receipts. Okay, this is also come under the budgetary receipts. Capital receipts. This is just opposite to revenue receipt. What is this? Capital receipts are those estimated receipts of government which create a corresponding liability. Okay, there in revenue receipt it does not create any corresponding liability, but here capital receipts are those estimated receipts of government which create a corresponding liability and lead to reduction in assets of the government. the assets of the government will reduce and the liability also is created in case of capital receipt. Money comes to the treasury of the government. This is also considered as income of the government. But in revenue receipt, there was no problem in liability, does not affect the liability, does not create or does not affect the assets of the government. But in capital receipt, it's not like that. It creates a corresponding liability and it also leads to reduction in assets of the government. The government asset will be lessened and liability also is created. So there are three types of capital receipt. One is borrowing and other liabilities. Suppose if our government borrows some money from other countries, from abroad or from any sources, then money comes. When you borrow, then money comes to your pocket, but liability increases. Okay, you have to pay back. You have to pay back. So that is borrowing and lending or borrowing and other liabilities. When you borrow, money comes to your treasury. It is a kind of income, but at the same time, it is not. You cannot say that it doesn't affect the liability. It affects the liability because you have to pay it back. Okay. Now recovery of loans. Again, when you recover the loans, naturally it also you can say it kind of liability is created and your liability increases with the recovery of loan. Then disinvestment. Okay, disinvestment. What is disinvestment? Disinvestment is a process in which a part of the public sector is sold to a private sector. Okay, any PSU, a part of PSU, if it is sold out to a private sector, a small part maybe is sold out to a private sector, that means you are getting the money because you are selling a part of it. A part of your company you are selling. So you are getting money, no doubt, but it reduces or what you should say, assets. It reduces your assets because that particular part will no longer be yours. Okay, so naturally that is disinvestment. This is just opposite of investment. Investment, you add more and more to the existing capital stock, and disinvestment is nothing but a part of your company or your public sector. Generally, when it is sold to a private sector, so naturally by that process, by that transaction, you will get money. Government will get money. Money will come into the economy of the country, but at the same time, the particular public sector unit, that particular part which is sold, will no longer be property of that particular public sector unit. So that is called disinvestment. So these three are again capital receipt. Of course, revenue receipt, capital receipt, all are budgetary receipts only, the income of the government only. But revenue receipts, government has nothing to do. It comes, you can say, just freely it flows into the treasury, whereas capital receipts are not like that. It also comes to the treasury of the government, but at the same time it creates a corresponding liability. It creates a corresponding liability. Okay, money comes, but for that money there is a corresponding liability, and again the assets of the particular unit will also be causing to reduce. So these are the three basic parts of capital receipts. And revenue receipt we discussed, capital receipts we discussed. So we discussed only in this particular module number 2, we discussed structure and component of budget, in which we discussed only budgetary receipts. Okay, we did not discuss budgetary expenditure. We discussed only budgetary receipts, and that budgetary receipts have been classified into capital revenue receipt. I should say capital receipt, of course it is there, revenue receipt and capital receipt. So what are revenue receipt? Revenue receipts are those receipts which do not cause any effect to the assets and liabilities of the government. Capital receipt, just opposite, it causes a reduction in assets of the government and it creates a corresponding liability. But anyway, all together, if you see it in a broader perspective, it is all budgetary receipts. Of course, there are certain areas where assets and liabilities are affected. In certain areas, they are not affected. But ultimately it is the government revenue or budget revenue. Okay, this is what we discussed in module number 2. Now, in module number 3, we will discuss budgetary expenditure in my next video. Till then, have a nice day. Take care and stay at home and work hard and see that you come out flying colors in your ensuing exams. Good luck. Thank you.